Daily chart, we broke to the downside. We have 2 legs down. The market rallied and then sold off, forming a low one, rallied again, forming a doji. So it's basically 2 legs up, testing the breakout point up here. And now the bears have a second leg down. But you can see what's happening. Pretty strong reversal up, and it's a sign that there's probably more buyers in this general location. Look what's happening in the final, basically minutes of the session. Very strong buying. That's pretty common. And you see this rally, and you look at the rally and you know that it's probably strong enough that the odds are we're probably going to find buyers below and get a second leg. And in the final minutes of the session, we're getting that strong reversal up. Gap down on the open, and the gap was fairly large, and we formed a bull bar closing on its high. And can you buy the bull bar? Well, it's a pretty big bar. I think it's probably 25 points or so, if I remember correctly. 29 points. Big enough bar. We'll probably get a second leg up. We got a doji, so buyers below, and we have a second leg. What about buying it? You can, but in general, you're risking a lot. And because the gap down was big, odds are we're going to form a trading range. And it's more likely we'll form a trading range than immediately reverse. Got a bear bar on 4, closing on its low. Strong enough surprise, we may go a little bit lower. Then we got a bull bar on bar 5. For the bulls, bar 5, good bar, but because of bar 3 and the gap down, and traders who, because of bar 4 and the gap down here, bulls who bought 3 scaling in lower might be disappointed enough that there might be sellers above and we get a second leg down. And that's what happened on 6. Outside down, 6, good for the bears, but it's trapping bulls who bought above 5. If 7 is a bull bar closing on its high, I think bears have to get out. And then we have a bull bar closing on its high with 7. What about buying it? Some traders will, but you're still in the middle of this overall tight trading range. And that limits the potential for the bulls. 8 outside down, 3 pushes down, 1, 2, 3. Possible double bottom of 1, but bulls, again, they need a bull bar. And then 9, we have a doji, not a great buy. 10, inside bar, channel's tight. Probably going to go at least a little bit lower. I wouldn't be surprised if we fall below 1, but a trading range is most likely. And then we try to get another buy signal bar 12, but you have to wonder, why do the bulls keep getting buy signal bars and failing? And now, because we're in a tight trading range, that increases the risk that we may end up just going sideways here. Then outside down, 13. This channel is getting a little bit too tight, and that makes it a problem for the bulls. Bull bar, 14, good for the bulls. What about buying it? Some traders might, but it's the first strong-looking bull bar breaking out of this channel. Bulls really need to follow through, and instead we got an outside bar. So outside up on 14, trapping the bears, and then we have outside down on 15, trapping the bulls. So this is a problem. 16, pause, limits the downside, so it may go a little bit lower. And then 17, bear bar. We have a small second leg down after 15, but in general, the channel is so tight, whatever reversal up it gets, probably going to be minor. 18, bull bar, but tight channel, probably sellers above. And then 19, we have a bear bar. Good for the bears, but bear bar, pause, bear bar 18 with a small bull bar. And then 19, a bear bar, even if 20 is a bull bar. Downside's probably limited. And then 20, we have another consecutive bull bars. That's good for the bulls. Increase the odds, we're going to go at least a little bit lower. And then 21, now we have 3 consecutive bull bars. Good for the bulls. But I still think the upside is limited. Probably limited. At some point, I think we'll reverse, but I'm not sure how much further down. We may have to go a little bit lower first. We have a bull bar, good for the bulls, but tight channel with 3 consecutive bear bars. I suspect sellers above and a second leg down. Or at least another leg down. And then outside bar on 23, doji, not a great buy. Then 24, a bear bar. For the bears, can you sell it? You're selling pretty low if you do. And it's I think it's fairly dangerous. If you do sell it, you got to get out above a bull bar. And then 25, bull bar closing on its high, good for the bulls, probably going to go higher. 26, follow through. Consecutive bull bars, 25, 26, probably buyers want to pull back in a second leg up. Bear bar 27, but not a great buy. I suspect buyers below. And then 28, pullback for the bulls. What about selling it? I think 25 and 26 is strong enough that selling 28 this far from the moving average, I think it's a low probability trade, and it's a bad high one to sell. And because the odds are you're going to get a second leg up, and that makes it an okay buy. Follow through 29, good for the bulls. Probably going to go at least a little bit higher. And then we got follow through on 30 and 31, good for the bulls. And you can see we started to channel up. And in 25, we formed a doji. This is a tight enough channel that there's probably buyers below. And then we got the upside breakout on 35, good for the bulls. But at this point, climactic, leg 1, then leg 2, leg 3, parabolic wedge. Strong enough bull bar. We may have to go sideways for a few bars. Bear bar 37, probably buyers below. I suspect the upside at this point is probably going to be limited. And therefore, buying right here. The upside's probably limited, but the downside, I would not sell below that bar. And we have an outside up bar. That's good for the bulls. And then, obviously, the bear bar closing on its low. That's a little bit of a problem if you're a bull looking to buy right here. If anything, big bar, traders may look to buy a pullback. And then we got that surprisingly strong bear bar. That's a little bit of a problem for the bears. For the bears, if someone's selling the close of that bar, that increases the risk that you may get a deep pullback. So as far as selling it, I would not. And then we got the doji. That's a warning. Not a lot of traders selling. They're not strong momentum, but we still may form a bear flag and get a second leg down. Bull bar, good for the bulls. Probably going to go at least a little bit higher, but then the bulls failed to get strong follow through. Low one short, not a great sell. Probably buyers below, but better to wait and see the follow through. Bad follow through. Okay, swing buy. And the bulls tried to get the swing, but look what happened. Dojis and then a bull bar. If they're going to get the upside breakout, they need to. And instead, we got the bear bar. Bulls will get out below the bear bar here. Bears will look to sell, hoping this is a breakout, bear breakout, and then a bear flag that'll lead to a second leg down. And then they got 3 consecutive bear bars with 48, 49, 50. That's strong enough that the odds are we'll probably get a second. We'll probably go at least a little bit lower. If we get a bull bar closing when it's high, I think you really have to get out. And then 51, it's not a great buy signal bar, but it's 2 legs down. Okay to get out. 52, follow through. Because of the reversal and follow through, we may find buyers below in a second leg, and bulls that did buy the midpoint got trapped with 53. I think it's okay to get out along split 53. It's a bear bar closing on its low after the 3 consecutive bear bars, so we may go lower, 54, 55. 3 consecutive bull bars probably limits the upside. Then we got the doji 56. I think it's okay for bears to start buying back shorts, betting on a bounce. Then we tried to bounce with 59. The bulls just couldn't. They tried, but they just couldn't get it. We had a doji on 60, bull bar 61, but it was small, right at the moving average. My concern with that is because we're right at the moving average, the bulls really need to break above the moving average. And then we got a bear bar on 62. 62, strong enough bear bar closing on its low. Probably going to go at least a little bit lower. And then 63, doji, not a great sell, probably buyers. And then we tried to break the upside 64, but we couldn't break above the moving average, and we sold off 65. 65 bear bar closing on its low, but I suspect buyers below. And the bulls tried to reverse up on 66. But why are we holding below the moving average? Then we got the doji, then we got the bear reversal 67. At some point, we're going to break out of this range. And then the bears tried to break out of the range. And instead, the bulls got a bull bar, and they broke above the moving average here. And the bulls tried to form a double top with 61 and 71, but 70 and 71 are too strong, and that makes me think the odds are buyers below and some kind of second leg up. 72, what about selling it? I would not. It's consecutive bull bars, and that makes me think there's increased risk of traders buying and scaling in lower. 73, not a great buy above, but not a great sell below. Then inside bar 74, we may try and go a little bit lower, but if we do, there's probably buyers around the 24 close, and that means I think it's really difficult for bears to be selling down here. We got the bear bar closing on its low, but I suspect the downside risk is limited. And then we touched the low close 24 on 76, and then we reversed up 77. And then we obviously got the strong rally into the close. For stop orders, can you buy above 1? You can, but I would not. It's a lot of risk relative to the That's a lot of risk to take on the open. Risking 30 points on one bar. You're probably not going to make 60 points, and you probably want twice your risk. And it's in the opposite direction of the moving average, so really not ideal. For the bulls, maybe they buy above 14. Not ideal. If they do, they got to get out of longs below the 14 low or below 15. Bears, they can sell 15, or they can wait and sell the breakout in maybe 19 or 20, but pretty late in the sell-off. If you do, you get out of longs above, you get out of shorts above 22. Some bulls might buy, but the channel's tight. If you buy it and get stopped out, you got to buy again above 25. Bulls, they can definitely buy above 25. And bears, I would not sell below 27. Bulls, I don't think they have to buy to sell out of longs below 27 either. And if they do, they buy again above 28. I think bulls get out below 39. Bears can sell if they're aggressive, but parabolic wedge, probably minor reversal. And if the bears do sell, they probably buy back their shorts above 42. Some bulls will buy. Otherwise, they wait for the second entry on 44. Bears, if they sell 43, they got to get out of shorts above 44. And then bulls, I think they get out below 48. And then bears can sell. Do bears get out above 51? I think it's reasonable. What about above 52? Some might, but it never triggered. And the bulls who are front running the breakout got trapped on 53. Bears can sell 53. They can sell 54. But once you start to go sideways in a channel, it's probably better to buy back your shorts. And I think this gets really difficult to trade with stop orders. If you buy here, what do you do here? Do you get out? And if you're not careful, you'll buy, sell, buy, sell, buy, sell, and you'll just get chewed up. And then bulls, if they buy the breakout, I think you see 3 consecutive bear bars, you're probably better off getting out and looking to buy again. Otherwise, the other alternative is using a wide stop and scaling in, but you got to be willing to buy more at the 24 close. And I think it's really difficult to do. For limit orders, probably sellers above 2, but I suspect buyers in the bottom third of this bar. And as the market started going down in a tight channel, it made it dangerous. And then I thought probably buyers below 23, but we may get a second leg down. So buyers, and the second leg may go further. I thought buyers below 27 or 26. I thought sellers above 41, but you're so low in the range, the pullback might be deep. So I think it's a dangerous sell. And I thought probably buyers in a second leg up, but bears got trapped on 53. And then we went lower. And then, all through here, buyers below bars, betting on a bounce. And then here, I think it's really tough to buy. But if anything, this is a bear breakout of a wedge that's likely going to fail. Or buy the close, sell the close. I think, maybe sell the close on 19, 20, 21, but I think it's tough. And then probably buy the close 30, 31, 32 for at least a small second leg. Is it sell the close on 40? I don't think so. And, what about 49, 50? It's probably okay, sell the close, betting on a second leg down. But again, I think it's really tough to do so. And then here, not good buy the close, not good sell the close, not good buy the close for the bulls. Someone said they're reviewing my sessions, and I keep saying we're in breakout mode. Yeah, it's probably talking about the daily chart. You look at the daily chart, it's breakout mode, and they're saying if it's breakout mode, they said they heard Al say the same thing. What does that mean exactly? Can you sell on a stop 1 tick below the range or buy on a stop 1 tick above? One of the problems with breakout mode is you have to understand, the more you can understand the overall context, the more prepared you'll be for the breakout mode. Breakout mode means probability is close to 50-50. And one of the overall problems is if we break to the downside down here, there's still a 50% chance that the breakout fails and reverses. If we break to the upside up here, there's still a 50% chance the upside breakout fails and the market reverses back down. And that's why I think it's relatively, in general, and it's not as simple as just buying on a stop 1 tick above the range or selling on a stop 1 tick below. Obviously, there's situations where you can do that. For example, if 18, for example, is a small bar after a strong enough breakout, that's volatility contraction. Breakout mode is always a trading range. And the stronger the trend, in other words, the momentum down is stronger, that 18 is unlikely to lead to a strong reversal before it goes lower. So technically you can sell on a stop below the range. Another example of that would be something like this over here. You have a really strong breakout 24 and then contracting triangle right here. That means breakout mode, and therefore it's reasonable to assume that the contraction here is probably going to get trend resumption. And in a situation like that, it's okay to buy on a stop above the range because the odds are the upside breakout is going to be profitable. I think the market will make a new all-time high. Yes, I just don't know when. I've been saying that on the blog for a while. I think buyers below on the daily chart, and we'll probably test somewhere up here in the 77 and the 7,700 round number. Where do we go tomorrow? Bears have a bear breakout below this tight trading range here. They're hopeful tomorrow is a strong follow-through bar. And then the bulls, they want a strong bull reversal bar closing on a tie. If the bulls are lucky, we'll get a fairly strong reversal bar. But we'll see. I still think overall, I think it's enough momentum that it increases the risk that we get some sort of second leg. And if the bulls are lucky, maybe we'll get a buy signal bar closing on a tie. You have some bulls who will buy above the high of this bar. There's some bulls that will buy above the high of this bar here and scaling lower. And they're hoping that over the next few trading days, we'll get a strong reversal up back to the buy signal bar. One said, will the all-time high happen during the RTH session? I have no idea. It'll probably get tested in the RTH session, but we could easily test it. Maybe we rally for a few days, and then the Globex we break above it, and then we try and break above it again in the RTH. No idea, but we'll find out. All right, so interesting day. I think this is enough momentum. Probably buyers below in some kind of second leg. So hope everyone has a great rest of their afternoon.